How did Jeff Bezos lose millions? Hey guys, today we're going to talk about how did Jeff Bezos lose millions. Let's get right into it. Recently, the fortunes of America's wealthiest billionaires fell by $93 billion, the ninth worst daily loss in history, as hotter than anticipated inflation data shook the markets. The net worth of Jeff Bezos decreased by $9.8 billion, the most of any billionaire tracked by the Bloomberg Billionaires Index. The net worth of Elon Musk has decreased by $8.4 billion. The fortunes of Mark Zuckerberg, Larry Page, Sergey Brin, and Steve Ballmer all decreased by more than $4 billion, whereas those of Warren Buffett and Bill Gates decreased by $3.4 billion and $2.8 billion respectively. The billionaires' large daily losses reflect the broad sell-off in the US stock markets as investors wager that higher than anticipated consumer price index data will prompt the Federal Reserve to aggressively raise interest rates. The S&P 500 index fell 4.4%, the most since June 2020, while the tech-heavy Nasdaq 100 index fell 5.5%, the most since March 2020, when it fell more than 12%. In the meantime, there is little doubt regarding the state of the crypto and traditional markets. The 8.3% inflation number dissatisfied investors across the board, increasing the likelihood that the Federal Reserve will maintain its hawkish rate hike pace, resulting in a decline in asset prices. As previously stated in a CoinDesk report, annual inflation slowed from 8.5% in July to 8.1% in August, which was lower than the 8.1% that was anticipated. Likewise, month-to-month inflation figures were disappointing, with a 0.2% decline predicted, but a 0.1% increase occurring. Fed officials have reaffirmed their commitment to containing inflation, which is near 4-decade highs in recent weeks. They now possess additional evidence to support their position. The manner in which investors react to Federal Reserve actions is an emerging theme that may continue to roll already volatile asset markets. Even if a 100 basis point increase was proposed, investors' expectations for a 75 basis point increase have remained consistent and are likely to remain so until the FOMC meets on September 21st. This is the latest in a string of bad days for the markets and the fortunes of billionaires this year. In July of this year, Jeff Bezos' fortune decreased by $20 billion due to a decline in Amazon stock following a disappointing earnings report. The stock fell 14% after the company reported a massive quarterly loss of $3.84 billion. As a result of the pandemic, Amazon stock has lost nearly all of its gains. During the pandemic, consumers flocked to online retailers to purchase everything from face masks and Lysol wipes to patio furniture and dumbbells. In 2020 and 21, the company's stock soared. As the economy recovers and consumers return to brick-and-mortar stores, Amazon and other digital retailers will be under increasing pressure to demonstrate that they can sustain the rapid growth seen during the recession. The most recent earnings report from Amazon did little to alleviate these concerns. The company's revenue growth was the slowest since the dot-com bust, and its outlook for the current quarter fell short of Wall Street's expectations. Due to shifting market conditions, a new difficulty has emerged. The threat of rising interest rates and rising inflation prompted investors to begin selling technology stocks at the end of last year. As a result of Russia's invasion of Ukraine in February, oil prices this year have increased even more. In the days following the Federal Reserve's decision to raise its benchmark interest rate, the stock market has fallen even further. The sell-off has devastated the technology industry, with tech titans losing more than $1 trillion in value. The Bloomberg Billionaires Index provided comparable data. According to the index, the 500 richest people in the world lost more than $54 billion as the market declined. The majority of Bezos' fortune consists of Amazon shares, of which he owns 11.1%. Therefore, when Amazon's stock price declines, so did Bezos' wealth. If Amazon's stock price rises again before he sells his shares, he may be able to recover. According to the New York Post, his wealth has plummeted since its peak of $210 billion last year, when he was the world's richest person. Forbes reported that the wealth of Bezos' college sweetheart and ex-wife Mackenzie Scott, who received 25% of his Amazon stock in a divorce settlement, decreased by $6 billion, falling to $38.8 billion. According to Daily Mail UK, Bezos' net worth has decreased by $40 billion since the beginning of the year. Amazon is undergoing a stock split, which increases the number of outstanding shares while decreasing the stock price, thereby making the stock more accessible to the average investor. The split will be a 20-for-1 transaction, so if you owned one share of Amazon prior to the split, you will end up with 20 shares after the split, each of which will cost approximately 1/20th of the original price. Consequently, the value of your investment remains the same, and one Amazon share that traded for slightly less than $2,450 is converted into 20 shares that cost slightly more than $120 per share. What is Amazon doing right now? Frequently, companies with skyrocketing stock prices announce stock splits to make their shares appear more affordable to retail investors. Alphabet, the owner of Google and YouTube, with a market capitalization of nearly $1.5 trillion, approved a 20-to-1 split in July. Here's the catch. Despite the fact that a stock split may appear to make a share more affordable, valuation metrics such as price to earnings and price to sales ratios demonstrate that the stock is not more affordable. That's all for today, and we'll be sure to catch you all in the next one.